Joining us now with more on the tech rally and her top picks, Joanne Feeney. She's the portfolio manager at Advisors Capital Management. Joanne, let's start off with Nvidia as it approaches a $2.8 trillion market value. Has it gotten ahead of itself?
Yeah, I don't think so, David. I mean, it's always the case that, a stock's price will build in its future, right? And its future growth prospects are really quite impressive. But to put it in perspective, notice that Nvidia's earnings over the last year have gone up 460%. Its stock has gone up 250%, but earnings, are leading the way. And so actually the multiples come down in the last year. Nevertheless, right, the stock continues to rise on expectations that its growth will be more long lasting than for many other companies in the market that investors can own. So that's why the stock is where it is, and we do see an awful lot of growth ahead of it. Competition is coming, but it's going to take some years for that competition to make inroads.
Nvidia stock is up more than 130% since the beginning of the year, leading many big names on Wall Street to place big bets on even more growth ahead. But ARK Invest's CEO, Cathie Wood, is marching to the beat of her own drum. During the recent ETF Streams ETF Ecosystem Unwrapped 2024 event, Wood talked about the time when she ditched all her Nvidia shares back in January, right before the stock surged jaw-dropping 160%. Even though she sold at the worst possible time this year, Wood stands by her decision, saying that Nvidia historically has been a very cyclical stock, and added that it would take a significant price correction for her to reinvest in Nvidia. In today's video, we're going to cover Wood's controversial comments on Nvidia stock and tell you why we completely disagree with her on this. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
I know we're in growth mode for all these companies in terms of adoption and demand, but how do you think about the sustainability of revenue growth for some of these companies that are in early, and how long that lasts?
Sarah, it's so interesting to look at those Nvidia numbers as just an exclamation point on how the world has changed. You look at their growth last quarter, 460% earnings growth. Boy, that's going to drop an awful lot this quarter. It's only going to be 260% earnings growth. But this is just this big step up change in the opportunity ahead of them. A year from now, Nvidia earnings are likely to be growing at 25 to 30%, and that's in expectations. Other companies that are just getting involved, right, will not see the same kind of step up. This really was a unique opportunity for Nvidia.
At the event, Cathie Wood said that back in 2018, Nvidia benefited from the crypto movement, but ended up with a huge inventory correction, and crypto was about 3% of its business. She expects the same thing to happen again, but she doesn't think that it will be as serious. If you're not familiar with what she's talking about, you should know that during the crypto crash in 2018, Nvidia had 4 straight quarters of negative year-over-year revenue growth, and its stock price dropped by about 53% during that period. It didn't recover until the pandemic-fueled boom, and this happened because when crypto crashed, miners flooded the market with used GPUs, giving bargain prices to gamers, and this decreased sales for Nvidia, leaving the company with excess inventory. Additionally, chip makers like Bitmain started to produce specialized chips, known as Application-Specific Integrated Circuits, or ASICs, to run the computations to produce the most valuable cryptocurrencies. Those ASICs had only one job in life, and were ultimately far better at producing those cryptocurrencies than GPUs were. So GPUs were largely replaced by ASICs for cryptocurrency mining, adding to Nvidia's woes. Cathie then said that the shortage of GPUs, which are Nvidia's second largest revenue generator, has not been as acute recently, with the likes of Tesla having no problem in acquiring the chips. Wood added that she used the capital she got from selling her Nvidia shares to invest into Coinbase and other software companies across her range of ETFs, including the flagship ARK Innovation ETF. She said that maybe some of these software companies didn't do as well as Nvidia in this period, but if Nvidia is to continue working, we must see this pull through into the tech stack and the central part of organizations, so there are going to be bumps in the road. But is that really the case? And will Nvidia really struggle in the long term? Let's find out. Hello everyone, and welcome back to Investocracy. While Wood has been right about Tesla before, she can't be more wrong about Nvidia right now, as it's very unlikely that Nvidia will see any issue with excess inventory. Right after the Q1 earnings call, Nvidia's CEO, Jensen Huang, did an interview with Yahoo Finance in which he said that demand for the company's flagship H100 chips is still so strong, even as Nvidia prepares to launch the more powerful Blackwell GPUs later this year. He said that the company's customers want to put Nvidia's GPUs to work right away and start making money and start saving money. He also said that H100 demand grew throughout the quarter right after the company announced Blackwell, so this should tell you that Nvidia won't be seeing a demand problem anytime soon. Jensen added that demand for both platforms will outstrip supply well into next year, with the complexity of these chips also challenging the company's efforts to keep pace. If anything, that means huge revenue streams for the next 2 to 3 years or even more. Also, Nvidia now makes more money from segments like enterprise, cloud, and data centers than personal GPUs, and the applications of their GPUs now span beyond gaming and crypto, so what happened in 2018 probably won't ever happen again. We can only see growth for Nvidia's future as the global data center market is expected to hit $622 billion by 2030 from $301 billion in 2023, and in March of this year, it was reported that Nvidia had 65% of the data center AI chip market. So it could definitely capitalize on that explosive growth, and if it managed to maintain the share, the company could bring in $404 billion in revenue by 2030. If Wood is waiting for a big drop to buy back into Nvidia, then I doubt she'd get that anytime soon, but maybe she'll load up after the split to get shares at a lower price. Most recently, ARK Invest bought 7,861 shares of AMD, Nvidia's main rival, and this transaction was valued at $1.35 million. AMD claimed a 33% share in the server CPU market as it readies its next-gen processors and unveils a GPU roadmap, with CFO Zhong Hu highlighting strong growth in servers, CPUs, and GPUs, citing partnerships and transitions to AMD-based infrastructure. Many analysts anticipate semiconductor industry optimism despite challenges, so the outlook for both Nvidia and AMD is positive, and we might see Wood buying Nvidia again soon enough. Though she probably won't admit to her Nvidia blunder. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
If the markets continue to hear higher for longer from a range of Fed speakers or from the lead actor, as you mentioned, then that can kind of sideline the effect to which the Fed has on the markets, and the markets perhaps hang their hat on something else. I mean, for a while it's been in Nvidia and the broader kind of thematic trade of AI. How long can that still be the case?
Well, the Nvidia trade can last a long time. I wrote a piece, that Nvidia is the atlas holding up the market to some extent, and you know what? I can't get in the way of this stock. I can't think of a stock that has been so remarkably consistent at beating estimates, raising estimates, beating them again, raising them again. Rinse, repeat, and this is if I shudder to think what the markets would do if Nvidia stumbled. That's why I say it's sort of of Atlas shrugs, so to speak. But that can overweigh it. The other thing to think about is we managed to go from pricing in 6 to 7 rate cuts to now 1 to 2 for this year. The reason we got away with this is it's because the economy is doing okay. Ultimately, the market's not really about the Fed. It's about earnings. It's about companies making money. It's about them being able to grow and return money to shareholders. All those nice things. And you know what? A rate cut is helpful. But really, what's the difference if the companies aren't making money? So be careful what you wish for. We don't want necessarily a weak economy that'll bring us rate cuts. I'm fine, and I've been saying this all year, I'm quite okay with having a strong economy that doesn't bring us rate cuts if it brings us earnings and cash flows.
Nvidia is truly holding the entire market together, and this is one of the reasons why bulls love it so much. But there's also the fact that it will likely continue to dominate the AI market with its GPUs, especially after the Blackwell GPUs come out. The global AI market could still expand at a compound annual growth rate of 37% from 2023 to 2030, according to Markets and Markets, and Nvidia could be the simplest way to profit from that secular boom. Additionally, Nvidia's first mover's advantage in the AI space gives it tremendous pricing power. Its top-tier H100 GPUs cost more than $40,000, and it can keep raising those prices to boost its gross margin. Also, Nvidia's gaming business, 10% of its first quarter revenue, is gradually recovering as the PC market stabilizes. Lastly, this still looks reasonably valued relative to its growth potential. In fact, from fiscal 2024 to fiscal 2027, analysts expect its revenue to grow at a compound annual growth rate of 43% as its EPS increases at a compound annual growth rate of 49%. Based on those estimates, Nvidia stock trades at just 41 times forward earnings. On the other hand, AMD stock, which is growing at a much slower rate and has less exposure to the AI market, trades at 46 times forward earnings. So, investors who want to profit off the growing AI industry should buy Nvidia stock and hold it for the long term. You don't want to make the same mistake as Cathie Wood after all. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.